Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So yesterday we discussed some divergence between the behavior of the euro currency and some other markets, for example, its dollar index and interest rates in the United States. And here was a bit different performance, while the euro currency was making the attempt to move higher. On the dollar index, on interest rates, we do not see this performance. And while the dollar index stands right around this area, interest rates are rising, which is mostly not supportive for euro currency. And that tells us that sooner, probably rather than later, but the dynamic should be converge to each other. And most probable that it should happen on euro currency, because from fundamental point of view, currently it's also very difficult to find some reasons for optimism in euro. And one of the patterns, we said that in general, bearish context is valid, but we missed the final pattern that might be used for position taking. And we said, well, if, for example, we will get the grabber, we could think about taking the short position as market could show downward action. So today, as you can see on the euro currency, we've got this grabber. So here is was recent pullback. We have the bearish grabber that suggests that at least drop below these lows. But I suppose that whereas we are coming to interest rate decision, it probably will be, if it will happen, downward continuation, probably it will be stronger. So I do not exclude chance that market could return a bit down to the lows. Mostly, the pairing of the grabber and bearish sentiment is based on anticipation or expectation that Fed could change rate for 0.5% for the 50 basis points. And in fact, these chances exist because despite that recent talks about that situation becomes difficult, it might be the stagflation, so Fed will not hurry up with the interest rate change, but we've got the 8% inflation on the yearly basis and 12% on month-to-month basis. It's rather high. And today, for example, the investing.com shows that anticipation and expectation rate change stands for 0.5%. And from that standpoint, the pairing grabber seems reasonable, because if it will be 50 basis points change, it is not totally priced in right now. It was priced in a month ago, but due to recent events, it was partially priced out. And currently it will be some, let's call it, positive surprise for United States dollars. It will be 50 basis points, and that could trigger the grabber. At the same time, on lower time frames, on the 4 time frame chart, we have some tricky moment, because here we have two side-by-side bullish grabbers that suggest taking out of this top and actually raising of the daily pattern. The common rule of thumb, guys, in general, that the higher time frame pattern overrules the lower time frame pattern. From that standpoint, I am more reliable on the daily pattern rather than on the 4 time frame chart. This is just things to think about for conservative traders, for those who prefer to not take additional risk, prefer to wait. So if you have some doubts or you're not sure, it's probably that's the reason for you to stay aside for some time and see what will happen. Wait for clarity if you do not want to take risk on the contrarian signals that we have currently on the 4 time frame chart on the daily. At the same time, for truth's sake, guys, to take a look at the hourly chart, performance here is very difficult to call as a bullish. So first of all, recall what we said yesterday. This performance makes us think that we should get another upward direction, and indeed that has happened. So you can see this upward direction, although market barely hasn't quite reached the OP. But anyway, this action has happened and market has dropped. Currently, we have to rescale this pattern, because take a look at this drop. Market has formed bearish reversal swing because this low is below the C point, and this ABCD pattern is not valid anymore. That's why if you are considering any upward patterns, you need to take a look at this new one. It should be greater ABCD. This is the only pattern that we have currently here. It's valid. At the same time, so OP probably will be somewhere in this area. If you would like to, CLP we do not need anymore. So, but at the same time, take a look what we have. With this bearish candle, market has broken this consolidation. And, well, take a look at this performance. It's very difficult to call it as a reversal or something, attempt to go higher or something of that sort. Personally, guys, I do not want to make the bet on taking the long position in euro currency in such circumstances. This performance, forming a reversal swing, appearing on the bearish grabber on the daily, tells me that it seems that advantage in some points stands in favor of the bears rather than the bulls. And if you would like to take the short position, this you could stick with the grabber, just placing stop above this area and watch what will happen. If you would like to buy euro, it's also very simple to do. You have the grabbers on the 4 time frame chart, so you need to place stop somewhere below these areas as well. Those of you who prefer to wait for clear action once the maybe data will be released or Fed statement starts, you also could use the stop orders for entry. For example, you could place stop sell order near the C point. If market starts showing acceleration, probably this will be already on the background of the news on the Fed statement or something of that sort. And you could step in on the moment when the action just gets started. Also, don't forget that despite this major event today is the Fed, but we will get also retail sales, which also might be very informative. And retail sales, as you know, the 70% of the gross domestic product. It's very important. And markets also will take a look at it. It will be released a bit earlier than the Fed statement. So that's actually, guys, what we have. If you'll take a look at the other markets as well, for example, on the treasuries, you will see that interest rates are not dropping. So in general, this also supports the United States dollar. That's why I mostly gravitate to downside scenario here rather than bullish reversal.